Welcome back everyone to the Funderbeam podcast. It's been several months, probably over 6 months since we did one. That was due to my sort of enforced absence for a while. I won't go into that, but it's about time we got it back on the road and to kind of reflect on the year ahead, and the kind of the world of angel investing that we are firmly entrenched in now. I'd like to welcome Roderick Beer, the Managing Director of the UK Business Angels Association. Rod, how's it going?
Yeah, good. Thanks, Ollie, and thanks for having me on the show as well. I really appreciate it.
No, not at all. You're a distinguished company, actually. I can't remember the last one we did. We had the founder of Reebok on. That was one of my favorite ones. And then I think actually one of the last ones we did was with Lily Ray, who's like this SEO goddess in the States. So that was quite fun too. But we used to focus this on founders and the journey of founders and things because a lot of our investors were interested in that. But Funderbeam, definitely our focus has shifted towards angel networks, VCs, accelerators, and so on lately. So I think this week we're going to focus pretty hard on angel investing and angels in general. But Rob, before we get into the weeds of it, for our listeners from mainland Europe, Baltic, Scandinavia, and so on, can you just explain to us what the UKBAA's role is and the mission? Because it's kind of a unique organization compared to other countries.
Yeah, it is. Thanks, Ollie. So UKBAA, we are a not-for-profit trade association. We represent very much the angel and early stage investment ecosystem. So it's not just angels, it's more broadly all those who are deploying capital at early stages, and actually those who are supporting founders in and around early stage fundraising too. So as a trade body, we have about 220 members, ranging from I think about 90 angel groups across the UK. We've got 50 or so investment funds of varying shapes and sizes, but also family offices. We have online investment platforms, of which I'm very pleased that Funderbeam are indeed a member as well. We also have individual investor members, so quite a few of those, obviously, in the hundreds of those, in fact, separately. But also we support those, as I mentioned, who are there to help really build and grow and support that kind of thriving founder ecosystem in and across the UK. So we have lots of accelerators and royal societies, and we have government agencies like Innovate UK who do a lot of the grant funding here for founders and innovation. The British Business Bank, which is a kind of a government-funded bank of sorts, I guess, who deploy big funder funds basically in and across the UK, and many others in between. As a trade body, our job is many and varied. We have one of our core missions is about building better connectivity. Fundamentally, we want great investors to invest alongside other great investors into fantastic founders. So we do a lot of work around lots of events, so bringing people together, a lot of networking. We actually operate a bit of a deal sharing platform to help investors meet each other over deals. We operate some angel hubs around the country in the UK, so actual physical spaces where angels can kind of meet and greet and do stuff. We also have a member directory which lists all of our angel group members and VC members to really help people know and learn about who's out there. We also act as a bit of a kind of an amalgamator of news and events that are happening across the industry. So we list lots of news, deals being done, all the events that are kind of happening in the investment space as well. The other part of our role as a trade body is education. We're really big on education. I mean, ultimately, we want investors to maximize their chances of successful returns and enjoy the journey, right? So we did a lot of work around how to invest, how to deploy, how to be more efficient in making those investments, how to support founders in the longer run as well, which I think is really key. The final part of what we do is really very much around that kind of championing for change. So we'll conduct research on the industry. We'll try to understand, what are the bottlenecks, what are the choke points, what are the issues. We will then champion for change at government level with big corporate, whoever it may well be that can support this issue in helping to fix, grow, improve our industry. Key areas include improving diversity across the investor base. There's been some fantastic work across diversity around the founder base, but actually you also need to have investors who are also following that diversity piece. So more women, more investors from minority ethnic backgrounds as well we want to see. We work also in the leveling up agenda, which I'm sure many nations out there will be familiar with, where a lot of the capital in the UK is centered very much around London, around kind of key cities, even though there are founders based and fantastic tech clusters all across the UK. So trying to really galvanize and grow more investing both locally and helping to convince London-based investors to look a bit further afield in different parts of the UK. And then finally, we kind of, one of the other issues we work around is ensuring and helping a steady flow of capital into key, sometimes underutilized or undersupported sectors in the UK. So creative industries receive a tiny amount of angel investing, despite the fact that it's actually one of the UK's biggest kind of exporters and growth stories. Areas like biotechnology, really challenging to get into from an investing perspective, but actually the UK with its universities, with its capital infrastructure, is actually a really good place to invest. So very much kind of building and growing it more broadly across the country.
I'm going to definitely pick up on some of those topics later on. It's interesting you mentioned creative, right? Because I don't know if many people know, but the UK is for video games, is an absolute powerhouse in video game development, Rockstar and lots of other incredible games houses. But I doubt if you scope your LinkedIn today, you'll see many VC funds looking at the creators of video games.
No, music as well. Yeah, absolutely huge in video games. We're really big on music as well. In fact, also not just creating music, and obviously there's well-known British bands who've done incredibly well over the years, but actually consuming music. The UK is, I think, the biggest consumer of online music for music streaming in Europe, in fact. So it's actually quite a really quite a big market on its own right. But there's some great stuff happening across creative as well.
Yeah, and we'll go into the detail on some of those, because I think it is. I think you're absolutely right. I think sometimes sectors can put off investors and investor groups, especially things like biotech, deep tech. It's almost like if you don't know it, you don't look there, or you want someone with industry experience, actually. But I guess bodies like yourselves can help level that up. Just we'll definitely come on to lobbying as well, because I'm super interested in that. But one thing I just picked up on that I wanted to talk about is from a trade body point of view, and this will be relevant to a lot of our listeners. You said there's a lot of individual angels who are members of the UKBAA, and there's a lot of angel networks. How's that member mix changed for you? How long have you been in the organization?
I've been at UKBAA for 7 years, probably.
Yeah, so
quite a long time.
in that time, in that time, have you seen a growth in individual angels, or is it more a growth in networks that individual angels join? Because I think quite often there's this kind of comfort in numbers thing, right? And obviously being with like-minded people, geographically, sector, whatever it is. What's the kind of split, and have you seen a change in that over the years?
Definitely. I think there's been a significant, a significant growth in angel groups. The number of angel groups has grown significantly, I think. When I joined UKBAA, we probably had about 20, maybe 30 angel group members. We're now topping over 90 as well. And I think so many of them have been formed more recently because they really see the benefits of professionalizing their approach to investing. They see the benefits of coming together to invest collectively. So I've seen a large, a real growth in that kind of area. And we're at the UKBAA, we are real supporters of angel groups and syndication as well, generally because it's for many reasons, but fundamentally it's a safer way to invest. You can pool more capital, pool more resources. It doesn't cost you anything to do that. Also, kind of selfishly, from a trade body perspective, actually tracking, researching, supporting individual investors, of which there are like 37,000 out there in the UK, is really, really hard, because a lot of them don't even want to be known that they are investors. And so by chivvying them towards angel groups, we can actually work more closely with those who manage and run the groups. So we work with, which makes life an awful lot easier for us from a research and reporting perspective.
What about the profile of those angel groups? We are always talking with angel networks every day, but we see there's a lot of younger, more, not to cast aspersions at any of the established groups, but there are some really dynamic young angel groups out there. I'm thinking of Southeast Angels and others like this. Is that a relatively new thing? When you first came in, did you see a lot of younger people looking into these sort of things, or was it kind of an exclusive club for the retired and wealthy?
Yeah, definitely the latter, I think. So I've actually been involved in angel investing for about 18 years now, I think it is. It's been quite a long time, if not more so. So I've been involved in this world for a long time. And I started actually out at quite a young age, and I was very much the only person of that age in that industry for a very long time. And it's been really interesting just to see that the younger kind of next generation of investors now kind of coming forward. And I think that is definitely a trend that we're seeing. We're seeing groups, as you've mentioned, who are run by kind of younger, they're kind of 40 and below, which I think is pretty young given the average age of actually investors from our own surveys. There are more of those groups, and they're also better at more likely to use technology platforms, communication. They run their groups of WhatsApp and they're pretty interesting the way they operate as well.
Yeah, of course. This is this is what we do, so we're very aware of that, and it's interesting to see how I won't name any names, but actually just this week already, I've had conversations with a couple of angel groups who are at completely differing ends of that scale, and there's still an element for some angel groups, and I think these are what I'd call the hobbyist type angel groups, where the administrator actually quite likes putting all the stuff together, quite likes doing all the paperwork. And then there's the kind of younger, newer groups that want fast, transparent, visible, everything online type thing. And that's I don't know, it's great to see both, to be honest, but it's interesting that you've noticed that as well. Just on that member mix, one thing I picked up from your London Investment Summit, which was at the beginning of December, was that on stage you had one of your previous angel investors of the year, which was Chris. How do you go about, like, what in your mind makes a successful angel investor? And I know you give out these awards, and it's probably like there's quite a lot of fun involved in it as well. It's not super serious, but what is it that you look for or stands out from an individual angel investor? Is it just number of deals? Is it successful exits? Is it like bringing something else to the table? What do you guys kind of...
All of the above. I mean, first of all, they have to been, I think it's changed a little bit over the years as to what we look for. Previously, it was about exits. It was about the number of investments, the amount of support that they bring to their family. It's not just about writing a check and, I'm lucky enough that one of my 20 investments I made actually gave me an exit. It's about the fact, what we want to see is that the investors have in some way been instrumental in bringing that exit about, and also supporting that founder. So we really want to see investors who've rolled their sleeves up and really backed and supported them. That's key to us. More recently, actually, it's also been we've been looking at investors who are using their investment to not only back great founders, support them and grow and hopefully make great returns, but also to make a difference. So really focusing on investing in female founders, for instance, or doubling down on investing in green technology sectors to really help support the environment. Or areas that kind of bring some kind of social good, and focusing on that. So we've been quite, been seeing a bit more of that, a bit more focusing on that too. But one thing that always all these investors have in common is that they do invest a fair amount of money. So they are serious and they are committed. It's almost always it's not always a full-time job, but it's something that they do an awful lot. They actually put a lot of their time into this. It's not just something they just write some checks and see what happens. They're really committed into doing it. All of them have clearly got a lot of experience and expertise in their own personal, from their own personal story, and actually bring that to help support and grow the founders that they invest in. So that's been a really key factor for us. And actually, obviously getting exits and driving good returns is a key factor too. And to do that, you invest in quite a lot of businesses, generally speaking. So there are always going to be investors who've been doing it for quite some time as a result of that too.
But I think that involvement with the company rang out loud and true actually from your event. Walking the walk as well. Like it's okay writing the check, but actually then playing a major role in helping, whether it's with staff or advice or consulting, whatever it is, but actually really getting involved. I mean, we know someone like Chris Adelsbach is an absolute monster with the number of investments he does.
How many investments he's made?
Insane. I think he said it was 65 deals last year. That's pretty big. But what was clear from his Q&A on stage was how much he cared about the founder improving themselves and getting things right and not really leaving it to chance. I mean, that's the control in, that's kind of wanting the will to succeed, of course. But actually the story was good about how he gave the guy some advice that he should improve his pitching and introduce them to an acting coach. And the next time the guy did a pitch, it was completely different. I mean, it's just a unique story.
And it's also actually Chris is quite, it's funny. He uses that as part of his due diligence process. He writes so many checks to invest in so many businesses. It's not always him that sits down and does in-depth due diligence. He might be following others or being involved in it, but actually, how do you conduct due diligence on an early stage founder? Really, he does it through these kind of, part of his process is through these kind of touch points. Like, if I gave it advice, did they follow it up? If I offered an introduction, were they quick to pick up on it? Did they follow up professionally and do it? So this is kind of these things he really values, is the ability to learn, to adapt, and to change. And the founder that he, Jerry on stage that he interviewed,
Jerry, yeah.
he's absolutely doing really, really well for himself and absolutely smashing it. You know, Chris, he mentioned that, you know, he said, Jerry, your pitch was terrible. You should get some classes and support it. And Jerry went off, got some classes, came back, absolutely smashed it. And Chris, because he saw that actually, you know, you've listened to me, you've taken it on board and you've addressed that issue, that to me is a fantastic building block for a great entrepreneur. So
yeah, I just think it's a really interesting lesson in general, though, for any founders listening or who end up reading the transcript to this, that, you know, when you are talking to angels, to try and, you know, take the breadth of their experience if it's there, and that quite often the advice is often friendly, but actually it can lead to a lot more. And in that case, it's really interesting actually that it's part of the DD process. It's like, well, if a person doesn't listen to me and just carries on forging their own path, maybe they're not the sort of person I want to get in bed with.
Exactly. I mean, it's always one of the words that come up often, actually, and it doesn't always sit well with entrepreneurs and the way they operate, is being a bit more humble and actually being able to kind of take advice and guidance and adapt to it as well, because often that advice is coming from someone who has started their own business, grown it, and sold it successfully, often more than once, and done very well for themselves. So they have a lot of advice to give, and it's well worth listening to them.
Yeah, it's a great story, that, and maybe I'll try and get Chris on this podcast to tell it in his own words. On that, so that's, you know, that sort of touches on angels making a real difference for founders. What do you think, in your experience with UKBAA, has been the biggest advance or difference maker for angels themselves in the last few years? Is it platforms? Is it EIS? Is it just general, you know, a broader connectivity than there used to be? One thing, before you answer, one thing I noticed when I got into this industry, especially with, as you mentioned, in the UK, there's still this geographical pocket thing, you know, X angels, Y angels, and it's very much like this. I imagine that's actually got better, but has the connectivity, have platforms made a marked difference for angels, in your opinion, or what do you think the biggest sort of change has been in the last 10 years, let's say?
So the last 10 years, there's been a few. The biggest thing in my view is, first of all, what has really driven UK is really strong from an angel investing perspective, right? We've got 36,000 people deploying. Something about £2 billion is invested via our tax scheme, which is the EIS or SES scheme, which is a fantastic scheme. I think it's unique only to the UK, whereby you can offset half of your investing in SES against your income tax. You have to pay any gains that you make. You don't pay any tax. It's a capital gains tax free, so long as you hold it for the right amount of period, etc. It's a really strong tax break. That's been a huge driver for growth. It's been about 25, 27, about 28 years now of the EIS scheme, and latterly the SEIS scheme. So that's been a real driver for investors, because it really does it doesn't reduce. It reduces your exposure to risk and the overall kind of risk position on what is incredibly high risk investing. So it really does help. So we've always had that, and that has driven an awful lot of investing. I mean, 2 billion every year, probably about 1.5 of that we reckon is from angels directly into companies, and that's phenomenal. More latterly, it's also the fact that this investing in startups and founders and backing innovation has become much more mainstream and more visible. We've had the TV show. I mean, I say this TV show Dragon's Den that's been going on for years and years and years. We were actually, you know, kind of asked to give advice to the first ever show and episode and provide founders to pitch many moons ago. And although it is television, it isn't how it actually works. It's very different from real investing. It has put it into everyone's mind in every single living room across the country. So that has actually, I think, had an impact. Additionally, online funding platforms, much like Funderbeam, have had a really big impact as well in a number of ways. First of all, you know, they have been investing in marketing. You know, there are adverts to invest in founders on the London Underground, on buses, on I don't think I've seen it yet on TV, but I'm sure we will in due course. But very much they've been really driving the benefits of backing great innovators and supporting them. But actually the biggest impact of these online platforms like Funderbeam is in fact the ease at which people can now access deals and invest in businesses. previously, before then, it was very much a kind of a paper trail, very much kind of very hard, very much network based, which is the approach to investing, very much actually writing a check, posting it off and getting very much physical, very slow, very arduous, very challenging and quite hidden. But now with the kind of growth in online, I guess the digitization of investing, it has definitely changed it, I think, and attracted a younger crowd as a result, made it more accessible too, which I think has been really interesting. So we've definitely seen that as a trend, and it's something that I definitely support, that professionalization of angel investing and improving visibility of great deals and what great investing looks like. I think is a really good thing from my perspective.
Well, yeah, that's kind of you to mention the platform. That's what we're here for. But I think actually something I noticed today just on my LinkedIn actually is the amount of, whether you want to call them celebrity or well-known people in this space, whether it's people like Ryan Reynolds or Matthew Falomini or Mario Götze or whoever, who are well known for something else, who are suddenly making investing in startups very cool. Now, of course, we must always say the risk warning, and it is super high risk. But I think it's showing younger people who have ambitions of building and creating things that there's another way to invest your money, maybe. Although it is high risk, it's not like it was when, and not having a go at our parents' age or anything, but when they were growing up, this sort of thing just was not even, it didn't even exist. So I think young people are seeing that, whether it's creators on TikTok, and I can think of people like Megan Loist and others that are doing Gen Z stuff for VC. It's visible. And I think that's relatively new. I mean, that's probably in the last 5 years, not just the last 10.
Yeah, I think that's definitely been supporting it. Obviously, Andy Murray as well, British tennis player, famously was kind of backing and investing in early stage businesses too. Yeah, absolutely. I think it has certainly put it into that domain as well, which has been really good to see. I think we're always about, what we're really keen from a trade body perspective is angel investing, and also being able to support founders too. So actually being able to bring more to the table than just your money, and also actually understanding the dynamics of actual making returns as an angel, because it's one thing to invest in 2 or 3 businesses. That's not really going to get you your returns. And statistically, you have to be investing in a minimum of kind of 15 companies really to hit the return metrics as a bare minimum. Some investors say a minimum of 20 as well. So we're very keen, although I'm very encouraged by this easier access and a younger generation wanting to get involved in investing, it is high risk. And so we're also keen to make sure there is a kind of alongside that, lots of education to help the younger generation of investor understand how it actually works in terms of making returns on investment, which I think is really key.
Yes, and our colleagues at the FCA and elsewhere are keen for us to make sure we point those things out on a regular basis as well. You mentioned the EIS and the SEIS, and Christiana, I think, spoke at the investment summit as well. And I went to an EIS led event down at Bristol at the end of last year, which was really interesting as well. That's been something that has smoothed the path for angel investing and investors. How about the friction? What is it? We're kind of come back to the lobbying. What is it that UKBAA members, whether it's networks or individuals or VC or anyone, what is it that they want you to help solve and lobby for more greatly? I know that Henry from Bowhurst and some others spoke about the SEIS not getting an extension, for want of a better word, as in not stopping anytime soon, being just an absolute massive bonus. Is that something that the people were asking you to keep chipping away at with government?
Yeah, so it was actually, SEIS is actually all fine. The EIS, we were championing very much for the sunset clause, whereby in 2025 EIS would come to an end unless it gets renewed. And in fact, it's been confirmed in the various budgets and micro budgets and various budgets that we've had in the UK that it will in fact be extended. When it will be extended to, we do not know, and how long for it will be extended, and whether they'll just make it a permanent break, which is something that we would like to see. SEIS, so for those less familiar, Seed Enterprise Investor Scheme is a tax break where you get a bit more against your income tax as a tax benefit, but only for investing smaller amounts into very early companies, so companies less than 2 years old, and actually they can only raise at the time £150,000. They've now extended that, so they actually increased the amount of money that a company can raise, effective in April, in fact, of this year. So been really, really great to see the government get behind that, recognise the importance of equity at early stages as well. And that's something we've been very much supporting, championing, working alongside the EISA, the BVCA, the VCTA as well. There's been some other great partners, in fact, making a lot of noise about extending SEIS, so Startup Funding Club and Codec and others as well have done a really good job actually in building better awareness at government level about the importance and impact that these tax breaks have in directing money to the innovators of the future.
Yeah, and that came across loud and clear as one of the huge benefits for angel investors, but something the UK leads the way in. And I think our government is rightly maligned at times, but I think that this is a sort of world-class scheme. I think someone called it recently, and I think it's made a difference to a huge number of companies as well. Following on from your London conference, there were varying predictions and things about navigating the year ahead, and there were some fairly honest opinions on stage, I think, from Innovate and others about what 2023 could and likely will bring. What did you personally take from the event about the year ahead? Because there's a huge amount of positive stuff still going on, by the way. We're in a recession, the things are going to be a bit down here and there, but there's a lot going on. But what did you take specifically from the various chats at the investment summit?
Yeah, it's a good question. I mean, I felt that I did pick up a good undertone of optimism. And I think if you're serious around angel investing and serious about backing founders and actually investing during a recession, during a downturn, is a good time in which to do it if you have capital available. Deals are going to be less competitive, valuations are going to be a little bit lower. Often big corporates who are the buyers of early stage companies' products and services are starting to turn a little bit more to innovation to help them solve some of their challenges around reducing their costs, etc. And so I do think there was definitely an undertone of optimism, but also the reality that we will be seeing, I suspect, a reduction in angel investing in the UK over the next 12 to 18 months. We've actually did a bit of survey recently of angels called, and you're welcome to check it out on the website, about a Climate of Angel Investing report. We put it together in the summer actually of last year, to understand, given the kind of cost of living crisis that we're seeing, the increase in the likely, at the time, this was the likely UK recession. What are your positions around angel investing over the next in the years to come? And actually quite a lot of them, about 46% of them said they're going to invest at a similar level. 30% of them were going to invest less over the next kind of coming 12 to 24 months. 18%, interestingly, would invest more, and 4% won't invest at all. So you can see it's a bit of a mixed message, mixed bag. Half of them are going to stay the same. A good chunk, a third of them are going to kind of invest less, but actually some of them are going to invest more as well. So fairly positive and fairly optimistic. Obviously, of those we asked, if you're going to invest less, what's driving why will you invest less? And 71% of them are saying it's because of the, cost of living crisis and the potential UK recession. Since that survey was done, we've been through a number of prime ministers. We've seen inflation absolutely skyrocket in the UK. We've seen the cost of living crisis really take hold, and we have officially entered into a recession. So actually, things have taken a bit of a downward turn even since that time as well. So we did a bit of a top-up survey to ask a few others as well to say, look, since this survey was done just a few months ago, so much has changed, and potentially for the worse. Where do you feel you're going to stand now? Are you going to change? And now something like I think in about 20% of them intend to invest less than they were originally going to since that report was actually put out, since that research was gathered. So in just a few months, over a few month period, we've seen a bit of a shift in mentality from investors, and it's all driven by the current uncertain economic outlook is what they've kind of put out there. So that's a bit of a challenge and something that we are worried about, but we do know that it is cyclical and they will bounce back again in 12 to 18 months time. And we also do know that although the investors will be worried about their existing portfolio, sometimes it'll be harder for their founders to raise money. Valuations will probably come down, so the actual on-paper valuation of their portfolios will reduce. we know that the actual exit life cycle of these founders are still many years away, and so it isn't really going to be meaningfully impacted when it comes to actual cash returns.
I think also there was a few. That's actually a pretty good summary, but there was also some cautious optimism about the sort of firms as they are now that have been built in downturns, and the change in mindset of some founders to get a bit leaner, to operate smarter, to be more protective of their runway. And I think it was I can't remember who said it, but who said that investing in a downturn more than ever, it's that correlation between time, runway, and revenue, which I know seems absolutely obvious, but funnily enough, with the past few years of the just build it culture and just get it built, and the rest of it will take. I think it's interesting that time it takes to build your perfect product, time it takes to get to your revenue, and the runway that deals with how you can actually get there is more crucial than ever. But I think if the founder and team are switched on to that, and actually maybe it puts in some sort of best practices that are good going forward anyway, right?
Yeah, absolutely. And we had, I think, a lot of, I feel like there's probably a bit more of a resilient ecosystem in the UK following the pandemic, where a lot of work was done in supporting and backing existing portfolios. Founders were very much put into a position where they had to think about how to extend runway. How can we do some raising? If we're raising now, how can we increase that raise, or how can we make sure it goes a bit further? So I feel there's probably a bit of natural resilience already built in how to handle this kind of shift in approach as well, which I think is maybe a positive to look from it as well.
Yeah, sure. I'm going to let you go in a second, but one thing I just interest. So we obviously operate sort of Europe, well, globally really, but strength Europe wide. Has the UKBAA ever looked into initiatives with other kind of angel network trade bodies across Europe, or indeed those sort of national angel networks like DANBAN or FEBAN or ESTBAN or others like that? And if so, what have you done, or what may we expect in the future with some sort of broader cooperation between European countries? Because I think that would be definitely of interest to some of our listeners.
Yeah, I mean, we are. So first of all, we're members of Business Angels Europe. We're also members of, or very much supportive of, EBAN as well. So in fact, Peter Cowley, who was previously the chair of EBAN, actually has been on our board, and we know Peter incredibly well. And we also sit on the kind of Global Angel Association as well, which is run by the entrepreneurs, the Global Entrepreneurs Network as well. So we do quite a bit of cross collaboration in just really sharing data, sharing activity, sharing stats. I think we've had I think DANBAN came over, in fact, more recently for a bit of a tour, and I gave a talk about the UK and how we operate and how we're doing things as well. So we do like to collaborate where possible and really share, because there are some fantastic investor ecosystems across Europe. I think the UK, we're lucky to have quite a high. We are lucky to have a large number of investors investing at early stages and quite a large amount of capital being invested. But there's also some incredible, very experienced, highly switched on investors across these networks. I was very impressed with the DANBAN grouping when they came over as well. So more collaboration, the better. One of the things that we in the UK have potentially struggled with is cross-border investing because of EIS and SEIS. It's such a strong tax break, and we do have we definitely have a good access to good deal flow in the UK. There are a lot of great startups to invest in which carry this tax break, but you only get it if you invest in the UK. So it's kind of actually, and for a negative aspect to it, it's kind of forced UK investors to be very much a little bit more UK centric and less likely to look further afield. But those with money where they can't benefit from EIS or SES are absolutely interested in investing in some of the fantastic founders that there are across the continent.
That's great to know. Well, I can feel a kind of big summer party coming on or something, Rod, where we can get everyone together. And
yeah, we do. I mean, BAE do a big angel. They bring everyone together often in Brussels and stuff as well. So we do come along to those and get involved in that and sharing some of the reporting and conversation, discussion, because we all want the same thing. We all want a really strong, resilient, accessible community of investors who can really back and support the founders to grow and scale in the future and to make a difference and do great things. We all want the same thing, so we are all very much aligned, which has been really encouraging when working alongside them.
Agreed to that. Just before I let you go, actually, on that topic, what are your favorite events to go to in the calendar year? Do you have like specific events that you're like always will go to, must go to that? Are there any that stand out? Because there was a big debate on Twitter, I think it was, recently, where one of the PR companies published all the sort of startup related events and said which will you be going to, and there was, there's Slush and there's Techivest and there's all sorts. But what's any that stand out for you, or which ones
Yeah,
will
I
you be
mean,
going to?
I am biased, so I would say our own. Obviously, as a trade body, we organise a lot of events, something like 40, or I think probably about 40 events a year, if not more so. So I'm a big fan of our investment summit. I'm also a big fan of our annual awards gala dinner that we hold every year as well, which celebrates great investing. Also do enjoy the events hosted by the BBCA. So they hold some really good events as well, more talking about later stage investing. We actually partner on them in doing the high growth event, which is all talking about that kind of Series A and beyond stages for scale ups to raise. So there's very much a lot of angel and VC collaboration across that. So that's a really good event I do enjoy, and we go to an awful lot in and around the country, to be honest, and there's an awful lot being coming in this year ahead. So I'm very much looking forward to a very busy calendar.
Me too, and hope to see you there. Right, I'm going to let you go. Thanks very much for taking the time, and it's been a pleasure to have you on. And I expect we'll catch up soon.
Brilliant. Thanks for having me on, Ollie.
No problems.